Swiss luxury group Richemont owns several of the world's leading jewellery, watches and writing instruments, including Cartier, Cleef and Arpels, IWC, Panerai and Montblanc. It is controlled by the Rupert family and has a market cap of 464.3 billion rand, a price to earnings ratio of 23.6 and a dividend yield of 0.4%. Can you in any way argue with the luxury attraction, the defensive nature of this stock?
No, I like it a lot. We started buying it back in 2008 when it emerged from the cigarette business, which, as you know, I'm not a fan of. And
that must have been a relief for you.
Yeah, I was very happy. 18 Rand a share, it's now trading at 90. That's been great. Johan Rupert has continued to steer this one. They've invested a lot in productive capacity, and they went into China early because, of course, Chinese people are very keen on gifting, also very keen on showing that you've arrived by having fancy things like wristwatches and jewelry, and especially watches and writing instruments, sorry. They mostly buy when they're in Hong Kong or Macau, when they're traveling in Europe. So it's not all shown up as Chinese sales, but Asian people have been doing a lot of buying in this case, doing well.
Does that mean we've got to look clearly to Asia as the barometer? If we see China falling back dramatically, it'll have a direct impact on Richemont. Would that be a fair assumption?
Yes, it would. I think America is also a very big market for Richemont, and they're on the up, so they could net each other off. So a very big market in the States, and a perfect rand hedge. So you see that share price there, top of went when the rand started to blow out. So no real earnings coming from South Africa, all offshore earnings. So the perfect rand hedge on the market.
Hopefully we made some money in the hot stocks portfolio. Tell me we did.
We have. We were not in it until this full ride to the top, and we're not currently in it. So we haven't made all of the money we could have made. But I think the rand was one factor, but the recent results was another issue where, you know, Johan Rupert spoke about the fact that within the jewellery business, they could have made 6 times the amount of items and sold them if they'd been able to A, get the gemstones, and B, have the little fellows in Switzerland who make them work a little bit harder. Because
you can't automate those little gentlemen in Switzerland.
Exactly.
You'll lose your premium brand quality.
But what he was alluding to is that, you know, you talk about the 99% of the world's population and the 1%. Think about what narrow portion of the world's population can afford jewelry pieces that cost $100,000 a pop. But that market is incredibly buoyant. So what's that? That's oil-rich people coming out of the Middle East. That's oligarchs.
It's a Forbes riches
list.
It's
a tiny group, but it's certainly one which Richemont appears to be really doing very well with.
Rob, has this been a favourite from your perspective for some time? I hope so, because obviously what it's done.
It's done superbly well, and the earnings are consistent, as you say. So even though people say the luxury cannot continue when the markets are so depressed, but obviously they do. And the markups are very high, and in the last period as well, we've seen a drop in commodity prices. That doesn't get transferred to a drop in the price of your watch. So you know their margins.
Unfortunately, not, because then you could all pile
over
in
time it does,
Cartiers.
but it's quite inelastic. So this previous drop in commodities over the last few weeks as well start to increase their margins. So the next set of numbers will be quite interesting in their trading update. In their first half of this year, they've also looked quite solid. So the market in general really likes them, and the numbers are very strong.
You know, Mark, Paul, if you believe your philosophy that emerging market currencies are oversold and will recover, then shorting a Richemont, or perhaps even buying out now, taking profits and buying in at a later stage when they get hit on the other side of the currency play, may be a good strategy.
Yeah, look, it's slightly complicated because there's the Swiss franc as well. They're reporting in euros, but they're trading mostly in Swiss francs, so you have to be quite careful about what's going on. I mean, I wouldn't put too much store by my currency forecast, because I only thought of it half an hour before I came to do the TV show today. You know, currency is absolutely...
No, we definitely won't be putting too much faith in your currency forecast.
I do think you have to look at the underlying business. You know, Johan Rupert's going to take this 1-year sabbatical now, but they've made a couple of key strategic moves. They bought a couple more watch brands. They're also expanding into clothing. Remember, they bought that thing called Net-a-Porter from Natalie Massenet. So they now got the web online thing going. They bought Peter Miller, which was like a sports brand in the US. So I think they're going to continue to, you know, nurture and build out the portfolio and try and deepen and improve their production capabilities.
Into that luxury segment of the market.
And just keep growing. So I honestly don't think there's any risk to them. I don't think the Chinese are going to stop buying them because the Chinese president says you must stop buying gifts and paying bribes. It's just going to keep going.
Do you believe
like
that there's no risk to Richemont's story?
Well, there's downside risk to the share price, but as a company as a whole, there's no real risk. The business model is very good. They've got the best brands in the business. They've got the best margins. And also they've bought, as Paul was saying, certain pieces of watchmaking that they can sell on to other watchmakers. So they own that
part of the value chain.
Part of the value chain now. And they're building that value chain bigger and bigger and bigger, where it used to be owned only by Swatch. So now they can, it was by law that Swatch only could do those. So now they've got their own value chain in there, and I think a very solid business. So yes, a little bit overpriced now with a very weak rand. But over the long term, very solid business.
Rob makes a point, overpriced at current levels. Are you brave enough to say that you would buy at all-time highs?
Yeah, look, we can only pick one trade of the day, so we'll have to decide what it's going to be. But I think it's a pity we haven't been in the stock. I think it's going to 100 and beyond. So I'd be a buyer at current levels. And I wouldn't worry too much about the short-term noise in terms of currencies and markets and all of that. It's pulled back marginally. I think it was in the mid-90s. It's now in the high 80s. But it's certainly one of those shares people like to like. There's only one thing that I can say against Richemont.
I can't understand why we missed the boat on this one. If you are so positive of the Richemont story, why aren't we in it on the hot stocks portfolio?
Well, you know, it's kind of dawning on me. A couple of weeks ago, when we'd had a whole lot of gains, we said to ourselves, okay, let's book those in and lock those away and make every rand a prisoner.
And Richemont was a casualty.
And Richemont was one of them. SAB Miller was a casualty. Aspen was a casualty. A whole bunch of stocks that we'd done well on.